everybody. Welcome to our first panel of the day. The panels that are part of the Startup Spotlight competition. I'm sure that you were all in the other room and have seen the awards. I hope everybody's happy. And now we are going to invite on stage four amazing people that have a lot of tips and tricks about how to deal with investors. And first of them is Andrei Pitis. Should we do the formal thing? We talked already. He's the president of the National Association of the Software and Services Industry, whose purpose is to help launch more tech startups through incubators and business accelerators in Romania and abroad. I'm sure that the Romanian people all know Andrei. He's been doing an amazing job with promoting and helping the tech startups in Romania succeed. He's really good, so I'm glad to have you here. Next up is Jure Micuz. Hello and welcome.
For the third time.
Yeah, for the third time. Jure, he is the one that established RSG Capital, which is the first Slovenia-based VC fund, and is actually actively promoting entrepreneurship and holds lectures on finance and fundraising procedures for startup communities. He has experience in deal structuring, business modeling and growth, VC capital, and the list was very long. So, I had to he's very active in Slovenia and all over the European region, I think. So, welcome, thank you. Adam Clayton, he's a business coach for SOS Ventures from Ireland. Welcome, again. He co-founded 7 ventures so far, out of which 4 got funded already. He's coaching in over 50 companies across 4 continents. He's a mentor for Enterprise Ireland and a program director for Accelerate. And also he's involved in a lot of mentoring and coaching the startups, not only in Ireland, but bringing them there through the Startup Ireland program, which is represented by Mr. Lorcan O'Sullivan. Welcome. You have one already. No, you can. Okay. Lorcan is a manager of overseas entrepreneurship at Enterprise Ireland. He works on attracting entrepreneurs in Ireland and offering all sorts of programs and opportunities to grow and grow and achieve rich global markets. And Enterprise Ireland is doing a really good job promoting themselves. I've met them everywhere, including in Rio de Janeiro. And Ireland is doing an amazing job with, promoting themselves as a startup hub, not only in Europe, but all over the world. So this is why we have 2 Irish people here on our panel. And welcome. Okay, so we are going to talk about monies today. And, something that I'm sure that a lot of people are interested in. And, I wanted to ask you guys, let's tell them, which part of investing are you more involved with, angel or VC? And what's the difference, if you can explain that?
Yeah, for me, it's easy. I'm involved in the angel investing, so in the seed rounds. And I will speak from this capacity and not from all. I'm not trying to teach lessons. I'm just going to offer you from my own experience. At the seed level, angel investing, do you want to explain? So this is usually the first real investment that happens, where you usually take another associate in your company or through another form of angel investing, where you take a partner. And it happens usually right after you do the prototype using your own money or money from friends and family. So, and after that, after angel investing goes to
venture investing.
Okay, so what's the ideal stage for a startup to start looking for investment? When do you start looking for angel investment, and at what point you switch to venture capital?
Hopefully before you run out of money. Right now in Romania, I don't know of a venture investment fund that invests pre-revenue. So this is how it is right now. I mean, I know that there are in some other countries, but not in Romania. So for that, you'll have to go abroad. You know, I mean, if you're able to bootstrap, I mean, I would also suggest to bootstrap, meaning that either you don't take any investment or you just take angel investment and you're able to generate revenue. And after you generate a decent amount of revenue, then you'll be more capable of getting VC investment even in Romania.
Yeah, I mean, that's, if I may continue here, because it's kind of natural. We are doing venture investments in early stages, which means that we invest somewhere around 1 million, 1.5 million in euros for minority shares in the companies, which means that the company has to be somewhere already. It's not just the idea and the team, you know, it has to have some first revenue at least. And it helps a lot if the company raise some money from the angels before they, you know, raise the money from us, because that means that they already have this culture of, you know, having one external source of finance in the company, and they're more used to the, I don't know, to the let's say that they don't manage the company by themselves completely. They have to find some, you know, they have to follow some advice from the business angels, because we take the board seats as well. We look for minorities, so which means that operational, they still, you know, they lead the company, but with all the strategic decisions we want to be involved. And you know, it takes a little bit of patience from both sides at this point.
Okay, and from you know, Lorcan and Alan, you have a different perspective, I think, from Andrei and Jure.
Well, I was just going to add on. So these gentlemen have described like the two different pieces of angel investing and VC. So just to confuse you, I'm going to say that SOS Ventures kind of does both of those things. So we're a VC fund, but we're not looking after other people's money. So we get involved at the very early stages. So we would do seed funding, 20,000, 50,000 euros. We would like people to come on one of our own accelerator programs that we run in China or wherever, and then we would invest further beyond that. So we could help a company from the very early seed stage through to investing 2 million, 5 million or whatever, if that's the sensible thing to do.
So you cover the whole range?
Yeah.
Okay.
So there is two reasons to take an angel investor on board. One is for money. The other is for their expertise and their connections and credibility. Because if you can get a very good angel on board, it's easier to get in the door to talk to a venture capitalist. So that's the first point I would make. The other thing is, different companies do it. You know, the theory is you start with an accelerator, you get maybe 15,000, then you go to an angel and get 30 or 40, then you go to a seed fund and get 200 to 500, then you go to a VC. Not everybody progresses that way. So they do it different ways. Some people, if they have their own money, will wait a long time before raising a lot of money. So it varies. And we're involved in all three. Well, firstly, we don't do angel investing, but we actually pay brokers, and it's an idea you might consider here. We pay people who act as middlemen to matchmake between angels and startups. And that way we have grown the sort of the angel community in Ireland. It makes it easier for companies to find people. We invest in seed funds, and we also directly invest in companies.
Okay, thank you. Which are the go-to networks that startups should approach to find investors?
According to the Wall Street Journal, yesterday, Ireland has the most availability of venture capital per head in Europe. So obviously that's the right place. However, to be more serious, I have it here on my phone. I only got the message about 2 hours ago, so I was delighted to have something to say.
Congratulations.
Thank you. But realistically, at the early stage, the go-to network is mostly, not always, but mostly local. And as you grow in the size, it becomes more international. I think that's a fair way of looking at it. And I can't tell you what the go-to networks here are locally, because I wouldn't know.
Okay. Do you want to add anything? Or do you have any recommendations for the local?
So a good starting point is always Tech Angels, which is a network of local angel investors that actually just started, so we cannot brag a lot. I mean, we've done some investments as individual angels, but not as a group yet. I hope we'll do soon, but we're started and it's starting to look well. We're seeing startups that are promising. Other than that, yeah, the ecosystem is growing. We don't have yet funds that invest at the seed level, unfortunately. But of course, I mean, there are, and Ireland is very well known for this. And I think it's a great place to go if you are at that stage. And Maven Hat is a very good example of that.
The first step is made anyway. You co-founded Tech Angels. So, you know, Andrei and the Tech Angels will be part of the first tech-oriented, tech startups-oriented angel investors. So that's a good network. What are the common mistakes startups make when approaching potential investors? What's like the biggest failure that you've seen, you know, like, in your experience?
I think that there are two types of mistakes. One is taking the wrong deal with the wrong people, and the other mistake is doing a bad pitch to the right people. So there are two different types of mistakes, and do other people want to, or will I go on a little bit about some of the mistakes? You have to get across what's different about you, about your project, clearly and concisely and quickly. But that's not the only thing an investor looks for. Some investors have particular criteria. So we won't invest unless you're going to be headquartered in Ireland. So if you don't tell me that, you may not get through the door. In my case, we probably will, but many people, if you don't meet their minimum criteria, so you need to do your homework. But I would look also at the team, and I would look at the stage of growth. So if I have a wonderful description of an idea, but I have no idea whether they've got traction or not, it's a pretty silly pitch.
So from my understanding, investors love numbers.
Well, actually, that's true. And what you have to remember that this whole thing is a people game. Setting up a business, finding investors, finding customers, it's all about people. So whatever they like to tell you, investors obviously will never work with somebody that they don't like. And it's a bit like a job interview. After 30 seconds, just like you're sitting there making judgments about me, I would do the same to you. I know after 30 seconds if I could ever live or work with you. So if you get past that stage, and if there's a kind of human chemistry, you're probably 50% of the way there. The numbers, you know, we can probably help you with. And so that will be one of the important things that people forget to do, is just get involved in a conversation with another human being about a project. And usually that involves the person who's coming to me asking me some questions about me, because my favorite subject is me, okay, and SOS Ventures. And if you ask me some questions about me, use my name, and talk about SOS Ventures, I'm just going to love you to bits for as long as it takes for you to pitch to me. And people just forget about that. It's happened to me in the last hour. 2 people just walked up to me and they kind of said, "Can I pitch my business to you?" And because I'm in a foreign country that I've never been to before, I didn't punch them in the face.
We appreciate it.
Okay, so that's some of the thoughts that are spinning around in my head anyway.
Yeah, I would say that I don't know whether I will be able to work with somebody in 30 seconds, but I'm sure that I will, I won't be able to work with somebody in 30 seconds. And the next thing is what really pisses me off when somebody comes to my office and then does the pitch and then asks me what kind of investments you do. Because we've got the list of our portfolio companies, all the guys are there. They're all over the place, so they can ask them, what kind of investments RSG Capital does. Not that they waste my time to do the pitch to themselves. And it's like, come on, do your homework before you come here. And the second thing that is all over the Balkans, that's the normal thing, is that they just focus on the tech stuff, the product and product once again. And nobody cares about the business model, sales, whatever. So they would spend 40, 50 minutes of their 1 hour pitch just on the product. And after all of it, I asked them, what about the sales? What's your go-to-market strategy and stuff like that? Oh, we haven't thought much about that. So, and these are the mistakes that are just we are seeing them on a daily basis. So and given the number of events like this one, I'm kind of confused. What does it has to be? What do we have to say to the audience to really change this mentality here, especially in these countries like the Western Balkan countries?
Yeah.
Yeah, And I agree with everybody that was said here, and especially from the angel perspective, it's a lot about chemistry and about being able to work with each other. And of course, anybody who doesn't know in what an angel invests and what are his strengths aside from his money, because usually an angel, I mean, I don't have a lot of money, and I want to put in that company and be able to protect that money. So to have the kind of network or experience or whatever that's complementary to what they're doing in order to help them succeed, grow my money, you know. So if I don't have that, I mean, I am approached by a lot of startups that, I don't know, are doing medical stuff or something that I don't have anything, and it just annoys me. I mean, even if the pitch is great, this is actually why I was thinking to create Tech Angels, because maybe their pitch was great, but I'm not interested in that. So they need to find an angel that has that kind of experience. So they need to pitch to 20 or 30 angels at the same time, you know.
So there's a lot of research involved, you know. You don't just go and apply and, you know, contact a lot of investors, because that gets annoying for you guys.
If you go one-to-one, if you go to a network, you can just apply, and then you're being told if there is that kind of experience in the network. So.
Okay. Okay.
And if you don't do your homework, you might end up with the wrong investor,
Yes,
and that can be bad too.
Especially when you get an angel investors, usually they get on board, like the board of directors, board of advisors, and it's a long-term relationship. And with VCs too, I guess, but for you.
So if you make a pitch to the wrong person and halfway through looks like the money might be coming and you realize it's the wrong person, it's very hard to back out. So it's much better to pick them before you pitch, and you're not wasting our time as well.
Yes. Okay. So how does a winning financial package look like? I read online there was a case in Poland, for example, where the investor took 90% of the company, and it didn't offer that much money. You know, so there are extreme cases. This is obviously an extreme case, but how does a winning financial package look like? I know you don't want to give like percentages and, you know,
I think in simple terms, it has to be one that the investor and the startup company believe is fair. I mean, if you want to sum it up in one word, if I think it's fair and if the other guys think it's fair, it's probably okay. So fairness, you know, it depends. So it depends what you come to the investor expecting. So I mean, sometimes investors will put money in and nothing else, and if that's what the company wants, that might be seen as being fair. I mean, for me, I would expect a little bit more than that, but that's just me. So if I can get money for an investor plus a bit of active time, whether it's as a board member or as an advisor or whatever, that sounds like a good idea. I think one of the things that it's worth thinking about right from the beginning is at least having some idea about what you think the long-term plan is. So a good investment is probably something where you can see how it begins with an angel investor or friends and family, whatever, and then you start to think about what happens next and what happens next. So, you know, in my position, we're fortunate in the sense that we can follow a company right through that. That's kind of unusual, I think, in my experience. So you need to think about those things, otherwise you end up with an angel investor and it all comes to a full stop. So a good package probably includes thinking the whole thing through.
With some investors, particularly, say, EU-funded and government-funded, sort of the terms are almost standard, so it's a good idea to know what they are before you go in. And with other investors, it is, how much is the company worth, really, and how much money do you need? And they have to work it from that. But it's very hard for a startup to know what his company or her company is really worth, so I don't have an easy answer for that one.
Yeah, indeed. I mean, in the early stages, it's extremely hard to make the valuation of the company. And usually when the guys come to us and they've got some ideas about the valuation, which is probably not the same as ours, they present their financial projections, which never happen in reality. But we are always investing as a mix of equity and convertible notes, and in convertible notes we set some milestones, and the conversion rate is based on some, let's say, multiples of sales or EBITDA or something else. And I think this is fair, because if they are sure that they'll make something, then they stand behind the numbers, then that's the valuation that's fair for both sides.
Okay. Should I?
Yeah, I mean, I think it's like the market economy. It's whatever they decide, it is fair. Usually with angel an angel doesn't want to take a majority, so an angel remains in the minority, and I don't know, angel investments that I know in Romania are in the tens of thousands, are at the seed level usually, up to 100, I guess. And I don't know, to give a rough idea of the percentages, I think are probably till 20% or under 20%. That's just to give a rough idea what happens here. The problem is with the follow-up, a big problem in Romania with the follow-up, and usually it's easier to get it abroad. But other than that, the terms are negotiated between the partners, because the founder or the founders plus the angel will be partners after this. So this is, harder than it looks sometimes from both parts.
Okay.
And one thing is, convertible loan notes are often used as a way of deferring that decision, so that it is very hard to make a judgment. So you use a convertible loan note, so the decision on the value is actually made at the next round. Do people know what I mean? Sorry, I don't know if anybody understands what I say.
It's really not very used, the convertible debt. I mean, it's not very used in Romania.
Okay.
So
we use it a lot.
I know, but I mean, you know that you will have a further step that it will give a value to the company. Here, it's not very clear how that next step will happen. So that's why so far, even though I know of a couple of cases, convertible debt is not very, used often.
I mean, we are using it in 2 cases where we had follow-on rounds. We just converted all the debt with some discount to the new valuation of the next round. And it was fair the founders were very satisfied with that.
Yeah, so convertible debt is you get a loan from the investor, and you just sign a contract that loan will be converted to equity at the next investor. That's usually institutional investor that will give a value to the company, and then the angel receives the equity. That's discount. I mean, with a little bit of leverage. It's not.
At that stage, it's much easier.
And because it's much easier, because the
to know what the real value is.
institutional investor will do a due diligence, and they will value the company somehow, and then you'll know how much your money is valued.
So what happens is, typically, is we convert at a discount. So this is how we do it. We say at the next round, if there is a next round, we will probably, not always, convert. So if the next round, and we will convert at a discount. So whatever we have put in, let's say 200,000, the next people come in and they value the company at 5 million or whatever. So we say we buy that percentage of the company, but we get a discount because we've taken the risk by going in earlier. So if we go in, if the next round is 3 years later, we get a 35% discount to the price that the other people are paying. So we convert our money at a 35% discount. And that's a way of avoiding that decision until there's much more evidence as to what the company's really worth. And it avoids a fight at the beginning.
This is in a fairly sophisticated market like Ireland. I mean, we're not that sophisticated yet.
Okay. Recently, it became legal for startups to raise money publicly in the US. And AngelList, how many of you know AngelList, have heard of AngelList? Okay, that's enough. So AngelList, for the rest of you that don't know, is a US platform aimed at raising, helping startups to raise entity or debt investments. And now they created the AngelList Syndicates. Do you guys know about them? I assume you do. So what syndicates do is they allow investors to invite other investors to follow along with them on a deal. So how do you think that the AngelList Syndicates have the potential to alter or enhance the VC existing position? And is there such, do you think that a lot of startups in Europe are going to move to US because it's a lot easier to raise money there because of the AngelList Syndicates?
It is a lot, and the one advice that I would give to people in Europe, especially in Romania, is to stop reading the investments that are being done in the US, because, or look at those, cut a zero and at the end, or maybe 2 zeros, and then look for that amount, because the money that is right now invested in the US is much bigger. Usually the amounts and valuations
Yeah,
are
but you
much
know how
bigger.
people look at, like Silicon Valley and like investors in US, and like I've heard it so many times, it's a lot easier to raise money in US. So because of that, everybody wants to leave,
Yeah.
instead of like staying here and helping grow the market.
Yeah, but you know that the stats are not supporting this theory, and this because only 0.02% of all the companies in US get any kind of external funding. So
I know,
that's
but
not a huge number. I mean,
that's
they're
not public,
they're-
so they still want to go there, right?
Yeah, we just read about the success stories here. It's like, but if you go to the valley and try to raise there, that's like Olympic Games. If you're the best in the world, then you have a gold medal. Otherwise, not. So, what's this? I haven't yet figured out whether angel syndicates, which are based on the platform, would be successful or not, because I don't know what's the fit between the two angels that would syndicate one deal. If I invest in a company and I would like to have a co-investor there, I need to have co-investor that has the same values and the same criteria that I have. And
Well,
if
then that's why you invite other investors to join you, like you know who you're investing
but
with.
you have to know them personally. You don't. It's not enough just to be on the same platform.
It's still a lot more personal in Europe than it is in the US. I mean, in the US, it's a lot more. The process is much better, so you can rely on the process rather than on people. I think that in Europe we're still relying on people rather than on process. For online syndication of investments.
Yeah, I mean, AngelList is still relatively new, so we actually own a 1% share in AngelList.
Really?
As it happens. So I'm on AngelList,
Okay.
just to see what the hell happens. So my experience of that is that all the people I've ever followed or projects, you're absolutely right, it's people. So AngelList is simply a tool that you can use maybe to keep certain companies in the limelight, or you can recommend them to people you already know.
Yeah.
Most of the syndicates I'm aware of, these people know each other anyway. AngelList is just a club that kind of went public. So I'm not sure how limited. I mean, maybe you should investigate it, because it's a public platform. It's not a US thing. Anybody can join it. Anybody can put a company on it. You can use it, and you should go and investigate it and use it for whatever you can.
But the VCs, in US especially, they were very against the syndicates. They felt threatened by the existence and the creation of
as
syndicates.
they're
But
threatened
not
by-
all of them. Like, for example, the Foundry Group, they created a syndicate on AngelList, so they will start doing angel investment as well.
Right.
So,
Syndicates are around for a long time, long before there were syndicates on AngelList.
but they're not public.
Well, in Ireland they are, because the broker I'm telling you will they will introduce you to syndicates as well. But syndicates is about people trusting each other. In fact, one of the accelerators in the UK is doing, and I can't remember which one, is they have a space just for angels, a sort of a co-working space just for angels, in order to encourage the angels to get to know each other better, to build the trust necessary for the angels to co-invest. So I can't see how you can have an angel thing where people only know each other through, it is personal relationships. So I can't see that AngelList will maybe I'm completely wrong, but I can't see how a network will radically change something that's really dependent on trust and relationships. This thing of trust and relationships is massively important when you get in bed with anybody. And part of my job in the past, we have had co-founders who have fallen out with each other. And I had a situation where two co-founders were screaming at each other in my office. Seriously, quite seriously. They were threatening to sue each other. They were threatening to sue me if I didn't vote for this one or that one, because we had a shareholding. We talked to our lawyer, and he said, yes, each of them has a good thing on their side. So I don't know which way the court case will go, but I suspect they'll both be bankrupt before the court case is finished. Okay? So anything you do with bringing in partners, you have to trust the people. And if the chemistry doesn't work, it's the wrong deal. Whether it's a co-founder or whether it's an angel, it's absolutely vital. That's why I'm a little bit cynical about making teams from an online. Finding people and then meeting them through online is one thing, and then meeting them offline. But finding people and doing it purely online, I don't know. Maybe I'm completely old-fashioned, but that's me.
Okay. I wish we would have more time, because this is obviously a very long subject. We can stay and talk for hours. So basically, there's no magic recipe for getting investment. It takes the right team, it takes the right deal, it takes the right investor that the teams should find, and sometimes investors find teams. So it's very dynamic, it's very organic, the whole...
It's the right product, the right team, getting your pitch right, doing your homework.
Okay.
In other words, it's tough. I think what Maven had said yesterday, you assign somebody full-time to it. And it also takes a long time, so you have to plan your timing. So if you can do it without taking in investment, if it's only for the money that you want the investor, if you can do it without it, the more you delay, the better, without ending up so that if you delay too much and then the process takes very long, you have a problem. But a lot of people try to do it without taking in if they can, and they may get people in as mentors and advisors rather than as investors, and maybe later they'll discuss investment, if you can, but it's not always possible, and every situation is different. But homework, preparing your pitch, having a good product and having a good team, there's, you know.
Yeah. Do you have any questions? Are there any questions from the public? Really? There we go. There's one. Here, I'll take the microphone. Thank you.
Thank you. My name is Stefan. I would like to know if there are any kind of, any kind of hacks that I can use to make you overestimate my potential. Is there any shortcuts you're using and that I can, that it would be good for me to know?
I think what Lorcan said was really important. So what you're trying to set up is a relationship right from the minute you walk in the door. So most of us have sort of subconscious superhuman powers to know whether somebody is being honest, truthful, authentic, and all those kind of cool things. And so if you can do that, then good luck. You'll probably go a long way.
Yeah, I would like to add, replying to this question, and also as a conclusion for the side of the from angel side, you want to look at the angels that you know. You want to to get to know them, and then invite them as mentors to your startup. And if they agree, then it's the first step. If they come to a few meetings, it's a very good sign. And if they keep coming, in my opinion, I mean, you want to look at them is to have them help you bootstrap, but I'm sure that they will put money in you if they keep showing at the meetings. So do that. And
yeah, I think that you should always go for the straightforward, honest thing, because in the end people will know that they overestimated you. The investors will know that, and they will lose trust in you, and they probably won't help you in the future, or I don't know. That's my opinion.
Yeah, and this is also a recipe for not overestimated, in my opinion, because if you get to know a startup and if you get to know each other, then you get to know the value of each other, and
how to help
you
them
understand
better.
what everybody is bringing to the table. So then, the money is just an enabler to future success together.
Just a short sentence, because we've got 10 seconds. You have to be a marathon runner. So when you're raising angel money, build your relationship with VCs, because at some point you'll be there. And if a VC knows you already, from the time when you raised the angel money, and he can trust you, that's super important for us. It's not that we never invested in a company that just came through the door, and 2 months later we would have the term sheet on the table.
So they have the angel investment established before they approach.
It's not necessary to have the angel investment in the company, but if we all the guys that we've invested in their companies, we've known them for a while, and then you can trust the guy that he's honest what he says.
Okay.
You have to sell yourself to the best of your ability, but if you lie and give incorrect facts and they find you during due diligence, you're dead.
Yeah.
And by the way, they all talk to each other as well. So if you try to screw an investor, very often the other investors know.
Yeah.
Thank you. Alan, do you have anything to add?
No, I mean, a simple shortcut for knowing, so about building trust. Trust is built on a simple principle whereby you do what you say you will do. That's how you have the best friends in the world that you have, because those are the people in your life that basically over years have done what they say they will do. So someone even has an appointment with me at a certain time, if they're 5 minutes late, I might forgive them the first time, but I won't forget that. That's a really simple thing. You know, you keep your promises to the 100% degree.
Thank you very much. It was an interesting discussion. And as I said, I wish we could talk more about it.